Hello everyone, welcome to the Ichimoku.co chart of the day. Firstly to the S&P 500 on the daily charts, and here we see a change of trend today back to the downside. If you recall the previous day's trading, we saw the market trading within the range of the previous day, and it did suggest that there was quite some indecision in this market and some doubt about whether the trend that had formed to the upside from the previous day's trading, whether we were going to see that trend continue to the upside. Today we have had a confirmed change of trend to the downside. We do have a fairly small bodied candle once again, and this is the fourth consecutive day of very small bodied trading, and it reflects a lack of commitment to the markets by buyers and sellers at the moment, certainly waiting for the FOMC decision that comes out fairly soon. Importantly, with the trend changing back to the downside, we have formation of a black body candle, so there has been a shift in net momentum away from the buyers in a minor way to the sellers in a minor way as well. Probably even more important and having implications for the downtrend, we do have a largish shadow on the bottom of this candle reflecting the sellers losing some commitment, and it does raise doubt about the strength of the sellers in this move to the downside, and does raise doubt about whether they will have the strength to trade down through that previous swing low that's been set up. If we do see any bearish trading down through that area, we could certainly see the market testing down to the Kijun-sen, which in the long run would still be quite healthy for this market, as long as we're still trading above the cloud, which is a fair way away, and the market has previously been looking a little overextended. We are now attempting to find some equilibrium by moving back towards that cloud, but certainly not doing it in a strong bearish manner. Importantly as well, today the sellers have failed to close with control, so there still is an opportunity here for the buyers to come into this market. And if they do, watching for potentially strong resistance at the Tenkan-sen, which trades at the moment at 23.74. Now, just looking at this window that was open previously, and it has held as support on multiple occasions now, the market failing to close down through there. It still is in play, and it extends down to roughly about the 23.50, 23.51 level. So before we end up trading down through to the Kijun-sen, that is an important benchmark for us on the downside. To the upside, the important benchmark is the Tenkan-sen at that area mentioned around 23.74. Now we have had a potential reversal pattern set up here, and it's a head and shoulders pattern. And as always, any of these patterns require a trend leading into them, and here we see the trend leading into this pattern. We have the left shoulder forming here. It's a complex left shoulder, the head here in the middle, the right shoulder here which hasn't quite formed yet, and this pattern won't be complete until we see the close move down below the neckline here. So if we do see a close below there, the pattern will be complete, and there is a potential target down around this 23.06 level, very close to that previous swing high and the round number 2300. So that's quite a good target. Now, with the Kijun-sen trading very close to here, we would like to see the market close down below the Kijun-sen for confirmation, and the more bearish the close, then the greater prospect of the target being met. But at the moment, the pattern is incomplete, and it won't be complete until that right shoulder forms properly and we have a close below the neckline. So what we could see here is the market trade down to here and bounce back to the upside. So never trade these patterns until they're complete. Now just moving over to the Fibonacci candles, and here we see a resumption of the negative Fibonacci candles, these bearish candles. If you recall the previous day's trading, we saw formation of a couple of white body candles, and it did suggest that the buyers were attempting to build some strength, but they have certainly failed here. Today, the formation of a black body candle suggests that we have seen a flow into the downside and the increasing strength of the sellers. And more importantly, no shadow on the top of this black body candle suggests that the sellers here are attempting to build some momentum to the downside. So just monitoring very carefully that we could see the trend develop to the downside here off the back of what we're seeing here with the Fibonacci candles. Looking next to the band charts here with the S&P, and here we see market testing now just down into that lower part of the band, and it does suggest that we do have a weakening here in the market. It's certainly suggesting that the market isn't as strong as it was previously when we were trading outside of the band with that strong bullish tone. The retracement back to the middle of the bands is still quite healthy, and we're not going to see any potential bearish activity until we see the market trading down outside of that lower band. So the lower band is an important benchmark. What we have going on here is the band squeezing, and it suggests that we're seeing a volatility squeeze perhaps taking place, and we know that volatility moves from high volatility situations to low volatility situations. So we've had the high volatility situation up through to here, and then now in a cyclical manner, volatility leaving the market, which is seeing it manifest itself as a retracement and congestion and a lack of solid trending activity. Where we can go from here will be obviously either to the downside or the upside, so we're looking for a breakout in either direction. We want to see either a bullish or bearish breakout with some follow through and some swing highs or swing lows taken out. Importantly, the middle of the bands here has held a support. The market has tested down through there. The market is closed just around that middle band, so there is still an opportunity here for the market to trade to higher levels. So just watching whether we do see a bounce to the upside, as we've seen here previously where we had a squeeze going on, the market not trading down through that lower band. So we didn't see any weakness in the S&P through there, and we could have a similar scenario, but we react to the market, how the market reacts to these levels, and then we move accordingly in line with the market's reaction to these areas. Now moving next over to the S&P 500 futures on the hourly charts, and here we saw the market open above each of the Ichimoku indicators, so there was an opportunity here for the buyers to go on with the move, but we didn't see that. We saw the market mean revert back towards the Kijun-sen and the Tenkan-sen, holding as strong support. We then attempted to break out through those indicators and through the middle pivot point level, but we didn't see any strong follow through. We saw a lot of small bodied trading. Then the sellers came into the market about halfway through the session, trading in a very strong negative manner down to within the cloud, attempting to bounce, and then the Kijun-sen and Tenkan-sen changing character and acting as resistance. So whereas they were previously support, they started acting as resistance, and then we saw the sellers come into the market off the back of that change of sentiment. The market then traded through the Ichimoku cloud and down through to the third pivot point support level, bouncing off there at the end of the trading. The market was looking very overextended, and the third levels of pivot points tend to be extremes, and we don't tend to see strong follow through after we test these extremes, and we have seen the market bounce already and trade above the Kijun-sen and Tenkan-sen and the middle pivot point level, although we are trading down below the cloud, so still technically a weak market in the longer term time frame on these hourly charts by trading below that cloud. Continue to monitor the middle of the pivot points around the 2363 level, and with the Kijun-sen trading there, any breakout to the downside through there will be significant. And then also monitoring the Tenkan-sen at 2360 for a potential test down to the first pivot point support level, 2355. The second down around 2346, and I doubt we will end up trading down there. The third is very extreme, down around 2330. We're not likely to test either, probably down to the third or the second, unless we do have something of a shock in the market. So the extent of any downside move is likely to be down around 2355. Any upside move we could possibly test to the first pivot point resistance level around 2372, possibly to the second 2380. The third up here certainly does seem to be extreme around that 2400 round number.